A starts business with cash rupees 5,000, purchases rupees 1,000, sales costing rupees 800 for rupees 2,000, paid wages rupees 300, closing stock as on 31st March 2013 rupees 200. So let's draw journal entries. A starts business with cash rupees 5,000. The journal entry will be cash count debit to capital count rupees 5,000. Purchases rupees 1,000. It means cash purchases for rupees 1,000. The name of the party is not given in this transaction. So what we assume? These are the cash purchases. So let's move to the table of options. Debit all expenses and losses? No. Debit what comes in? Yes. The goods have come in the firm. So goods. On credit side. Credit all incomes and gains? No. Credit what goes out? Yes. The cash goes out of the firm. So you will write down cash. So goods account on debit side, cash account on credit side. We cannot write down goods. So change the words purchases instead of goods. And use the suffix account on both sides. And use prefix on credit side. So on debit side, purchases account, on credit side, to cash account. And the journal entry will be purchases account debit to cash account. Next transaction, sales costing rupees 800 for rupees 2,000. The firm has made a profit of rupees 2,000. But be careful, when we are going to draw journal entries and we are selling goods, we have nothing to do with the cost of the goods. So forget about 800, simply cash sales for rupees 2,000. So the journal entry will be cash account debit to sales account rupees 2,000. Now the new transaction is paid wages rupees 300. So come on debit side. Debit all expenses and losses. Is there any expense or loss? Yes. We have incurred the expense and the name of the expense is wages. So you write down wages. So no need to go to the option number 2 and 3 on debit side. Now move to the credit side on right hand side. Credit all incomes and gains. Is there any income? No. There is expense, not income. Okay, move to the second option. Credit what goes out. Anything has gone out? Yes, we have paid wages. It means the cash has gone out. So write down cash. So on debit side wages, on credit side cash. Now use the suffix as account. Means wages count, on credit side cash count. Now use the suffix to on credit side. So on debit side wages count, on credit side to cash count. Now come to the format of journal entry. How will you write down? Wages account debit to cash count. 300 rupees on debit column and 300 rupees on credit column. What will be the narration? Being wages paid. Narration is quite simple for you. Simply you have to rewrite the transaction. Now closing stock. Rupees 200. Simply at the end of the journal entries write down closing stock as on 31st March 2013 rupees 200. You have nothing to do with the closing stock.